Hi, this is Zak Mir with the weekend edition of the Bulletin Board Heroes here at Zak's Traders Cafe. It is Sunday, the 30th of April. Starting off with the FTSE 100, where we've had a decent end to last week. Key reversal of the upside, i.e. broke below Thursday's low and then closed above the high. That's a good signal, and people trade off that on the basis that it's caught out the bears. Got a line of resistance there from back in February. That's around the 79.30 level, looking for an end-of-day close above that to then take us up to a new leg to the upside, initially retesting February resistance around 80.47 intraday, and then up to as high as 8300, maybe as soon as the end of next month, if we get a quick break of that 79.30 level during the next week. Obviously, that's pushing it a bit, but certainly a look at 8,000 plus by the end of next month could be on the cards. RSI in the upper 50s, which is just where you want it to be for a continuation of the bull move. The worst at the moment on the downside is the 50-day moving average around 77.70. On to the DAX, which has always been that much ahead of the FTSE 100. Here we've had new support above old February-March resistance, 15,700. Beautiful candle on Friday, which was a great sort of hammer experience, and top of that channel there around 16,600. We're looking for that by the end of next month, while there's no end-of-day close back below 15,700 in February-March resistance. Worst case on the downside now below 15,700 would be 15,400 at the rising 50-day moving average, and we're at the highs even though the RSI is only at 63 or so. Still well off the overbought area. Onto the Dow, where we're almost giving up on this market getting through the one-year resistance line at 34,100, and maybe that's the correct thing to do, but we nearly cracked it on Friday, just about breaking or trying to break that one-year resistance line. End-of-day close above 34,100. We could be on our way towards not only retesting the recent resistance in the autumn around 34,700, but up to as high as 36,500 over the next 1 to 2 months. So maybe looking at the end of June on that. But obviously, the way these things can move, it could be much sooner than that. On the downside, 50-day line, the worst that we're looking at, so 33,000 or so. Obviously, we missed that on the recent dip, which was a plus point. RSI bounced just below the neutral 50 level, so that is a continuation signal that has actually worked in terms of getting us back on the key resistance level. Moving on to Bitcoin, which is on the wrong side of 30,000, but still looking pretty good in the sense that we had a nice bounce off the rising 50-day moving average during the week. Want to see an end-of-day close through the 30,000 level to give us a target as high as 34,000 by the end of next month, which would obviously beat the resistance on the way down at 32,000 for this market. At this stage, only down to as low as 25,000, the worst we expect. I don't really expect anything lower than the 50-day line, currently around 27,700. Moving on to the stocks, and the first one is Biome Technologies. We've got this beautiful little bull flag set up here. We broke through the 200-day line in one go, which was impressive, around 99 pence. Nice tight bull flag now, and just looking for a break of the top of that flag around £1.47 to take us up to as high as £2.40 as soon as the end of next month, assuming this is going to move pretty sharply as it already has over the last week or two. At this stage, only well below 120, recent support, and the floor of the September gap really delaying the upside scenario in £2.40. Moving on to Chill Brands, which continues to throw pies in the face of the bears, who obviously were calling it to zero, or possibly even lower the way they were. Here we've got this bull flag over the course of the last week, so looking for the shares to break through around the 6.5 pence level, maybe 6.6 pence level on an end-of-day close basis. That resistance line there from back in November. Above that, we're looking as high as 11 or 12 pence by the end of next month or going into June. But at least while we're above 5.5 pence, looking pretty strong on Chill Brands, as you could probably already work out. Moving on to Dekel, and here the shares have slowly managed to defy expectations. We had that second successful attempt at breaking through the 50-day moving average earlier in the month. The rally started off with bullish divergence that highlighted us to this situation. Current situation has been broken above the 200-day moving average around 2.6 pence, and above that looking for 3.6 pence by the end of May. The shares now above their 200-day line for the first time since basically this time last year, so quite a change there and something to follow up on, especially while we're above the 2.5 pence zone. On to a stock which I highlighted during the week, Graft Polymer, and here the reason for highlighting it was a rather strange one actually, that the RSI was basically at zero. We've basically been at a zero RSI there, or near to that level, since August, and still oversold. We haven't actually been out of the oversold area since August as well, so looking with the shares just to get back to maybe a normal type of RSI, so 30 to 70 over the near term, and maybe fill that gap down from 8 pence over the next week or two. So just a sort of oversold situation that which may resolve itself after recent losses. On to HEIQ, which has rehabilitated itself over the recent past. Here we've had bullish divergence. Haven't quite finished that bear trap rebound though. We need to get back above 22 pence to deliver a bear trap, but bullish divergence there. That should at least get us up to 25 pence, above 25 pence, looking for 40 pence on a 1 to 2 month basis, while there's no fresh lows below 15 pence. Another stock which doesn't get much airplay here is coming up next, and here we've got IXNET Zero, it's very trendy type of language. Here we've got a broadening triangle in place since October, but the real sizzle here, the bear trap gap reversal. The old lows there from January around 13 pence, and we've gapped through that and the 50-day moving average. Normally the case that an unfilled gap to the upside near the lows is a very strong buy signal. That's proved to be the case now. The V now is at above 16 pence, and our initial target there we're looking for as high as 28 pence by the end of next month. So not very nice signal there on IX. Another stock which has really delivered over the recent past is Insig-AI, and I apologise for not covering as much as I should have, but here we had the break of the 50-day moving average, bear trap rebound as well, and above that, initial target up to 18 pence, next target as high as 30 pence rather by the end of next month, especially while we hold above the 200-day moving average at 20 pence, so above 20 looking for 30 on Insig-AI, and for those who know the market, know it well, having Richard Bernstein on there is a massive plus. On to Jubilee Metals, and here we're looking at a situation where we've been hoping for a recovery of quite some time. Falling RSI support line rebound, still trying to negotiate the 50-day moving average at 8.6 pence. So far we've done that, and above that we're looking for at least the 200-day moving average area around 11.25 over the course of May. We're helped by that RSI 50 rebound, which should be a continuation signal on the latest recovery attempt. Basically, it's a double-headed inverted head and shoulders for those who like the charting patterns. On to Emerson, which is a requested stock, and so should it be. Looking very good indeed at the moment with this very tight U-shaped bull flag, broke above and closed above the 200-day moving average around 5.5 pence for the ending the week, and we should also see very soon both the 50 and 200-day moving averages both rising. 200-day line still falling, but that should resolve over the next week, and above the 5.25 pence area looking for 7 pence well before the end of May. So a great turnaround there on Emerson. On to Oriole, which I cover quite frequently here. Another tight bull flag breakout, and in fact just closed with the breakout at the end of last week, so above 0.21, looking for a move to the top of that broadening triangle from July as high as 0.4 pence by the end of June, and perhaps even sooner. We've got the 50 and 200-day moving averages going into Golden Cross, so that could be quite explosive while we hold above the 0.18 level. On to URAH rather, and Here a bounce off the floor of that wide rising trend channel to end the week, and looking for the shares to not only retest the February resistance around 2.5 pence, but eventually head up to 4 pence, maybe by the end of June. If you're cautious, you wait for an end of day close above the 50-day moving average around 1.95 pence before assuming 4 pence is on its way, and the stop loss there around 1.5 pence at the 200-day moving average. Finishing off with Vast, which is clearly still the punter's favourite. We've got nice U-shaped bull flag there, rising 50-day moving average as well. Say the 200-day line starting to rise too, but still looking for 0.9 pence while we remain above the rising 50-day line at 0.6 pence, and expect that to start moving faster relatively soon. RSI bounce above the neutral 50 level as well, so everything getting ready for a fresh leg to the upside. That's it for me today. More updates during the week.